Good morning, this is Dave Toth with an RJO MRT webcast update for Monday, June 22nd. As a follow-up to our basing and reversal webcast in the US dollar, would now like to discuss some peaking and reversal behavior that continues in the metal complex. Starting with the copper market, overnight's failure below the 222.15 corrective low from last Thursday negated our short-term basing and reversal threat and advice to establish short-term long positions. That position has been stopped out at 222 the figure, and more important, wiping out the bullish divergence in momentum on which that trade rec was based. More importantly, by breaking below last week's low at 221.5 and also the 219.95 low from June 3rd, the market on a daily scale has confirmed a bearish divergence in momentum. In recent webcasts and blogs, we've discussed the pivotal importance of the entire 220 to 223 area. This area was former resistance in April and May that was broken in early June, and if the market was truly strong, it should have been able to sustain levels above this area in general and above that 219 level specifically. The market has not done that. It not only confirms the short-term trend is down, with strength above Friday's 229.5 corrective high required to even defer that, let alone threaten it. It's exposing a larger degree reversal lower as the entire rally from the December of 08 125.5 low now is arguably a textbook complete five-wave Elliott wave sequence that may be vulnerable to a larger degree correction or reversal lower. Looking at a weekly chart, weekly log chart here, you can see the developing potential for a bearish divergence in momentum on a weekly scale. However, on this scale, prices below the 196.70 low from early May are required to confirm that. But you can see the magnitude of this peaking and reversal threat. Going forward, we advise the neutralization of any bullish exposure, with cautious bearish exposure advised between the 220 and 222 area, with strength above 229.5 required to negate that call. In lieu of strength above at least this 229.5 area, further and possibly accelerated losses are anticipated. Moving to the gold market, our recommendation in the 17 June trade strategies update to go short at 932 the figure area has been reinforced by virtue of overnight's weakness below last week's lows. It's confirming last week's recovery attempt as a three-wave corrective structure consistent with a broader reversal lower environment, and really defines last Wednesday's 943.40 high as the latest corrective high and the tightest risk parameter the market now needs to recover above to threaten or defer any kind of broader move south. Very important to this broader peaking and reversal environment on a weekly scale here is the insane amount of bullish sentiment accorded this gold market. As long as the trend is higher, such extreme optimism really is not a factor. But the moment the market confirms a bearish divergence in momentum and compromises that previous uptrend, especially given the market's proximity to the extreme upper recesses of the past 15-month range, we believe this market has become vulnerable to lower and possibly sharply lower levels, with all of this bullish exposure providing the fuel for downside vulnerability. Per these developments, bearish exposure is advised to be maintained with protective buy stops trailed to 944.5 or just above last week's corrective high. And lastly, and very similarly to the unfoldings in the gold market, the silver market also has, with overnight's weakness below last week's lows, has confirmed last week's labored, merely lateral recovery attempt as a corrective structure within this developing peaking and reversal environment, and we're looking for sharply lower levels there as well. Looking here at a daily scale, clearly the past couple of months steep uptrend has been broken. The market's failure to sustain prices above the February high at 1460 is clearly an indication of longer-term weakness. And surprisingly, looking at our RJO MRT Bullish Sentiment Index, the bullish exposure by the large spec community actually went up last week to 92%. 92% of the large spec community's open interest is in bullish exposure, and especially by virtue of the past couple of weeks sell-off that has confirmed at least the intermediate term trend is down, we believe that insane amount of bullish exposure now creates a source of fuel for downside vulnerability that we think could impact this market negatively for weeks and perhaps even months ahead, and is consistent with our broader basing and reversal forecast for the U.S. dollar. Please stay tuned to these and other updates on our RJO MRT website, and good luck with today's trading.